Hello, every one of us. Another wonderful day. I'm gonna go straight to it, right? Welcome to my YouTube channel. This is your boy Kevin. I'm delighted. And I hope you are ready to learn something new, something exciting that is definitely going to help you in your trading journey. Okay, so today I will be definitely talking about the most simplest, the basic of strategies that's out there to help you in analyzing the market, right? And that is the use of moving averages, right? The use of moving averages. So just in case there'll be someone saying, listen, I hear what you're saying, I just don't get it, right? This is what I mean. Moving average. I believe in the power of written word, so I'll definitely be typing a few things up on here for us, right? So moving averages, as the word definitely suggests by itself, right? This right here is the average, right? Is the average movement of price, okay, when it comes to the market. So basically what I'm going to show you is exactly how to use moving averages, and then simplest strategy to use, right? And you'll be able to make some trades and make some profits from the market, right? I'll show you how to use one moving average, how you can combine different moving averages, and then hopefully from there you'll have learned something new and you will be cashing in using this strategy. One fun fact I have to say, when I started trading, this was the second strategy that I learned after learning how to do market structure and everything. Moving averages were how I actually made my first money, if that makes any sense, from the foreign exchange market. And on my phone MetaTrader, on the app, I still have moving averages, and they help me in analyzing and confirming trades after I look at them on either TradingView or Goldcap, which is the app I'm going to use in my teaching today, right? So moving averages, first of all, it's an indicator, okay? So indicators are just, I don't know what to say to the technical word to use here, but they are basically written algorithms that help us in seeing market, where the market is going. That's what basically indicators are, right? Someone comes up with an algorithm that's gonna follow price action and basically creates, like, an indicator, a sign showing you how the market has been moving, and there's a potential for you to use that to predict where the market might go, okay? The other thing about indicators, right? Indicators are usually showing us past information. They are created based on past information from the market. So this is me just going a little bit into the indicators, right? Indicators basically show us past information, or they are as a result of past information. Market had already done that. Then the indicator comes and shows you what the market had done. So this is information that has been interpreted and presented to you in a much simpler way through either a diagram, a line, a circle, whatever you're going to be using, right? So moving averages, they are indicators. The other thing I'm going to mention about indicators, not just moving averages, but all types of indicators, is that you do not want to use indicators, moving averages, Bollinger Bands, or whatever else. You don't want to use indicators alone without being able to see price action, market structure. What I'm simply trying to say here is that indicators, and in our case here, moving averages, are an extra confirmation after you have been able to see price action, right? There's going to be a whole video talking about price action, market structure on my page, on my YouTube channel. So you can look that up in case you don't know what I'm talking about. I'm going to focus on the moving averages here. But that's basically, I'm going to emphasize that point again. You don't want to use moving averages or any other type of indicator as your only, okay? I'm going to repeat that. You don't want to use moving averages or any other indicator as your only reason to enter a trade. Indicators, in our case, moving averages, are going to be secondary. And this is what I advocate for. I personally advocate for this. They're going to be a secondary means of confirmation on what you have already seen from market structure and price action. Basically the same thing, okay? So let's get into it. Now, moving averages. Why moving averages? Moving averages will help us be able to identify the direction in which the market is moving. What do I mean by that? A moving average is going to look something like this. Okay, maybe make it bigger. There we go. It's going to look something like that. And if this line is progressively moving upwards, it's basically trying to tell us that the market is on some kind of uptrend, right? The market is pushing up, it's gaining value. And more especially if the candlesticks are above the moving average. If the candlesticks are above the moving average, then we know that we are on some kind of uptrend. Okay, then we know we are on some kind of uptrend. That just went bad real quick right there. Okay, then you know you're on some kind of uptrend. Let me just try and fix this up. And we might actually get into a trade here on gold. I'm kind of already in it, but I don't want to go into that right now. So that's what you'll be looking at, okay? And you will know what's happening. It's like I just messed that up. The other thing about moving averages, they'll also help us identify when the market is in consolidation. What do I mean by that? If these candlesticks are all laying on the same area here, okay, of the market, then you can tell. If it's just going horizontal, then you can tell that the market is in some kind of consolidation. It's also going to help you identify when the market is on a downtrend, and in which case the candlesticks are going to be below the moving average, okay? So it's an extra confirmation of what you can already see. And it's also going to help us identify support and resistance levels. As long as you become conversant with them, you will be able to look at this information, get to what we call confluence. Confluence is whereby you have multiple confirmations from different points of view that a trade is about to do a certain thing, or confirming something specific, right? It's like, for example, if you just, trying to get the best example here. If, for example, you were to look at me, right, you can see that I'm a black dude, right? Then if you listen to me, I have a Kenyan accent, okay? So when I'm speaking English, even though I'm speaking English, you can tell this guy has a Kenyan accent. Then if you look at my hand, you can see I have a Kenyan bracelet, which is another confirmation that this guy is definitely from Kenya. So you have a Kenyan bracelet, my Kenyan accent, and my Kenyan beautiful skin telling you that this guy is Kenyan, right? So that all those things are confirming the same thing. That right there is confluence, a handsome Kenyan dude, right? There we go. Anyway, and that's the best example I could come up with on a short notice. That's confluence, multiple indicators confirming the same thing. So we're going to jump right into this, right? And then hopefully at the end of this, we'll have learned something beautiful right here. So whatever platform that you are using, right? Whatever platform that you are using, it might be on TradingView, it might be on MetaTrader. I'm using GoldCap, which is a product of IM Academy, and I love this service. It has its own advantages, and I'll talk about it at some point down the line. But for now, let's focus on why we're here, right? Whatever platform you're using, just go to the place that says indicators, right? It's always going to be somewhere. It's either that funny looking F or the word itself that says indicators. So click on that, and then you're going to search for moving average. Now, there's different types of moving averages. There's a smooth moving averages, and then there's, the exponential moving averages. In our case here, I'm going to mix it up a little bit. There's no huge crazy difference. In a later video, I might explain what the differences are. But as for now, I just want us to see the strategy itself of using a moving average. In this case, I'm going to use the exponential moving average. So the moment I came down here and I clicked exponential moving average, you can see that it has given me a blue line in the background, okay? You can already see it there. If you double click on it, or if you, is it a right click? It should give you the options right here. And I'm going to change this to a 50. So this is the most basic way of using the moving averages. And I'm sure you're gonna like this video because this is a really beautiful strategy. It's a nice, easy strategy to use, right? I'm gonna make it black, just because this is gonna be, I have a way I use my colors. I'll sometimes use black or green on 50, but anyway, let's not get into that. So again, so now you have your moving average right there. I'm going to go into it, right? Anytime you are using a strategy, the one thing that you want to do is to always back test. You're going to back test this. But before we even back test, I'm going to explain the basics of it, right? Not even the basics, but yeah, the basics of it, how exactly it works. So first of all, this is on the 1 hour time frame with goals. If I was to go to 4 hours, you would still be able to see the moving average and how it interacts basically with the candlesticks, or even on the daily time frame, you still will be able to see that how it interacts with the candlesticks. I'm going to go back to the hour time frame, and more so because I'm holding this trade, and I want us to be able to see exactly why I got into it. But anyway, now right here is where I am going to start. Right here is where I'm going to start by basically explaining to us that the moment that the candlesticks went above the moving average, they have basically told us that there's something happening and we have gone from one direction to another. So Market went above the moving average, and we can see here that it started to create some kind of a support level on top of the 50 moving average. And let me just zoom this in for us. Okay. We can see here that we have two touches to the 50 moving average. Market completely rejected at this level, right? Before it pushed higher, continuing to gain value. Okay, so looking at that, you are thinking to yourself, okay, so there is something here that is valuable to know. When the market is above the 50 moving average, you see the support, the market basically bought, and this would have been a good point of entry for a buy position. Okay, and when the market pushes below, okay, when the market pushes below, for example, here, the 50 moving average, and we are seeing this rejection happen here, market basically dropped from there. We can see the moving average definitely does help us identify the direction that the market is taking. And also, right, you can tell if it's an uptrend or if it's a downtrend. So it's basically giving us an extra confirmation on what we already know based on the candlesticks. Candlesticks, they give us the price action, right? And also from that, we're able to see the structure of the market, right? So the moving average is confirming that for us. It's also helping us see the support and resistance areas. Okay, so let's say, for example, if I was to hide this and I come in here and I decide to draw my support and resistance zones, okay? Just for efficiency and speed, I'm going to change this to a line chart. And I'll draw some support and resistance levels. 1 hour. Okay. Only because I want us to see how exactly the moving average confirms this for us. Okay. It's going to be giving us that extra confirmation that we need that, yes, you can go ahead and take that trade at the current location. So we have that. That's a good support right there. We have a couple touches. Okay, I'm not going to do the whole thing. I'm basically just doing this for the sake of explanation purposes. I still have to do it right either way. You know, we ain't here trying to do some funny business, right? We're here to make sure that we're learning and at the same time offering value in a way that's going to benefit every one of you who's watching, right? So we have that touch there, bam. And I'm going to change this into candlesticks, right? So we can already see our support and resistance areas based on the lines that I just drew, okay? Now, if I go back here, and how do I bring back my, how do I bring back my moving average? Okay. This is the one disadvantage with using this right here. Okay, that's okay. I'll just get it. So EMA, moving average, you got it. Like use I can use green in this particular instance. One thing that's always gonna be bothering me is how I use the colors, because I try to like stay consistent with them. But now you can see it just gives us that extra confirmation. You can see this candlestick came to this resistance level, and it touched the green 50 moving average right here. Okay, so you can see that happening. You already know that resistance level, and you already have your resistance area right there. Right here, this is a support level, and you can see how the candlesticks played out there. We'll keep pulling it up. This right here, another support level. You can see how the candlesticks played out right there. And you know, we can keep pulling it up, and you'll be able to see the same confirmations, support, resistance, resistance here, support here. So basically, this is an extra confirmation. If we go to the past, you'll be able to see basically the same thing over here as well, right? So I'm hoping that you'll be learning something. So that's how the moving average basically will be working for you if you decide to use it. Now, coming back to the current market over here, we said when the market is below the 50 moving average, what are you searching for? You're searching for sell positions. If the market is above the 50 moving average, you are searching for buy positions. There is a method to this madness. You always, you know, if you have learned how to do the break, okay, the break, let's say the market is selling here. You learn to do the break, and the retest is where it gets interesting, because you're going to realize that it's not so different from one another, right? So this kind of breaks, this one retests this support level here, and then you can already see, you know what to expect. If you know how to use the break and retest, then you know you should enter there for the sell. It's kind of almost the same concept here with the moving average, okay? A break, a retest, and the market keeps selling. Rejection, you can see the rejection that happened here. Rejection, market tried to push back up, but it's now going back down, okay? Again, you can see here, the break, the retest gives you another retest to the moving average, and you can keep buying from there. Break, retest over there, and then keep selling. And you can basically use this as a way to give you that extra confirmation that you need to know, okay, there's a trade that's coming up here, okay? Now, when it comes to this, first of all, our goal is on a downtrend. So I already know that it's on a downtrend. The other thing that I know is that I have the confirmation of the 50 moving average that this market, yes, is on a downtrend. So yeah, I now have two confirmations that this market is actually selling, okay, because of the 50 moving average. So I'll be searching for that sell. So when the market here pushed all the way down, came back to this resistance level, you could have sold here, which is what I did, expecting for the market to sell all the way down, maybe to the next support level, okay? So that's just one of the tricks you can use. If we go back and back test as far as you wanna go, it doesn't even matter, or even on a different time frame, it still is gonna be the same. So we can see a nice move here. Market broke, retested the 50 moving average. You could have sold there, and this is on the 1 hour. And again, some people will be searching for exactly the kind of move I'm talking about, a break and retest. It's not going to happen like that all the time, because this is market broke the 50 moving average, consolidated, and then kept going. There was no retest to the 50. It's not going to happen all the time, but when the market goes above the 50, you already knew it was going to buy from there. Okay, so you could use this. You could use the 50 moving average as an addition, to your market structure and price action knowledge to help you understand, right? I've taken out the drawings to just help you understand, or even get a better confirmation on where this market is going to go. Okay, now I'll break this down to 15 minutes. I'm a day trader, so I always deal with smaller time frames. But here on the 15 minutes, you can already see the yes on the 1 hour. We had that confirmation that the market was selling. We come to the 15 minutes and you can already see there is extra confirmation that once the market got to this support level, let me see if we can bring back our support and resistance points just to prove a point here. So it's this level here. You can see this level here. I can highlight it for us. So that's on the 1 hour. We have our support level here our resistance level here on the 1 hour, and we already know market go here. If you were to go down to 15 minutes, you'll be able to see the kind of confirmation I'm talking about. So now you can see that on top of the market rejecting the resistance level, it also rejected, or rather, was pushed down by the 50 moving average on the 15 minutes. So you had two confirmations telling you that this is a good place for you to sell. Okay, so that was a good trade right there. That was a good entry right there. Same thing here. You can see what's happening. Market broke through this support level. The support level now has become a resistance, but it had also broken through the 50. And we know that we are on a downtrend. You already know you're on a downtrend based on the market structure. So the moving average is an extra confirmation. Okay, and this is going to give you multiple entries. So for example, here, right, you can already see, let me take out these lines. You can already see, first of all, that we have this area here. Market is definitely contesting at the support resistance level right here, but the market breaks. Market has broken this support level. It was a resistance. Okay, you can see how the market broke this resistance area here. So the first time it was rejected, pushed back down. Okay, came back, pushed back down. It created a higher low, and then it broke through, right? The market broke through here, which is the resistance level, creating a higher high. And then this is the beautiful thing. Market came back down and was rejected above the support level. And on top of that, it was rejected above the 50 moving average. Do you have a trade or not? Okay, so you can see just based on that knowledge, you could have caught 10 pips right there, right? That's 10 pips right there, clean 10 pips, okay? It's a clean 10 pips you could have caught for sure. okay? Just based on the knowledge that you have, right? Now, so that was your first move right there. This would have been your first move. Then we have another pullback. And you can see this market, as soon as this candle went below the 50, the green one went above the 50. There's a retest to the 50. You already know that you're on an uptrend based on the higher high, the higher low, higher high here. Now this is also a higher low because this is higher than this, okay? Higher low. So what do you expect here? Bam, right? How many pips are those? Let's say you even got in on this candle, okay? 17 pips, clean pips, clean pips, okay? 17 pips, clean ones. This is gold, okay? This is gold that we are looking at. I want you to just see how beautiful this would, beautifully this would be playing out for you. The other thing is here, you could also identify there's that area there, which could be your resistance here, which is your support here. So you can already see what's happening. Market kept buying, came back to our support now, okay? Went above the 50. I mean, there's a couple of, we could have called this short buy, but that's not a big move enough for us, right? You could have called that buy, right? And then you can see what happened here. Market completely rejected this area, went back above the 50 moving average. You can see the pullback, market stays above the 50, bam. Okay, bam. You're just going crazy with this. At this point, you're just going crazy with this, right? You're just like, bam, catching the moves as they're happening, okay? What just went on? Okay, you can see this market pulls back to the 50, bam, buys back up right here. Pulls back to the 50, buys back up. Comes to the 50, pushes up. And now you can already see that when the market came up here, right, it did not create this market did not create a higher high, but rather it created a lower high. So it tells you that there's something changing, okay? So based on price action, market structure, you know, you already know this is no longer a buy. This is what I'm saying. You cannot use moving averages as your only confirmation. No. They are secondary. They are an extra confirmation. After you have looked at market structure, after you know what's happening, right, with the candlesticks and everything. So now you already know this is a lower high right here. So I'm not searching for buys if I see a lower high, right? Oh, you probably have to be bananas to be doing that, right? You don't want to do that. So guess what? Right now, there's something beautiful that's been created here. This is structure that's coming up in this area. So first of all, you have that area, right? You can see where this candle comes up to. No, I'm just trying to show you even how to be marking up your charts and everything. But you can see this candle. Let me see if we can bring it in for our own benefit. But look at this. This candle right here rejects at that black line. These two also are trying to push up right there. We can see that this area is the same area as this one. So there's some kind of structure happening there. I just zoomed in for our benefit. It's not a major support and resistance area that's going to drive me crazy, but it's going to prove a point for us right here in a second. So you can see that. Then there is also this area right here. I'm just trying to do copy and paste, honestly. Like, I want to keep, pulling up lines and stuff. But here we go. Oh, bounced back up. But this is also an area of interest. Okay, you can already see that this market, so we don't really need this. We hope you saw the point that I'm trying to prove. Okay, this is on the 15 minutes. It's not the most ideal 15 minutes. I like analyzing on the 1 hour. It gives me more perspective. We wouldn't be struggling with this. You can see market pushes down below this low position here. This is why you need to understand the structure. Okay, so this is a low. Everything looks so so cramped up together. Have some healthy, clean up environment. So this is a low already. Market creates a lower low, lower high, and you can see where your lower high came to. It came to this resistance level, which was a support there, support there. Okay, so now you already know it's been rejected. What do you want to see? You want to see a pullback, then a sell. Now this pullback did not go all the way back to the resistance level, but look at where it went to. It went to the 50, and then bam, shot down. Market came back to the 50, bam, shot down. But look at this, okay? After it's done all that it's been doing, where did the market go back to? The resistance level now. And from the resistance level, you can see the market consolidating on the 50. Market consolidated on the 50. If you missed this entry here, right? You do not take this entry here for a sell. Let's say you never took this entry for a sell right there. You missed that trade. Then you see the market consolidating on the 50. Are you going to take the trade or not? Let me give you a second. If you miss this entry up here at the resistance level, then you see the market consolidating on the 50. Will you take the trade or not? Okay, definitely you're not going to take the trade when the market is consolidating on the 50. You will wait for another opportunity, right? That's going to present itself. Then you can take the trade from there. I'm already seeing some entries I would have taken. Like, for example, you can see this came back to this level. With time, we'll be learning a little bit of smart money concepts that you can implement, combine everything together for more confluence. But for now, you wait. You're just waiting. You're not in a rush. Market came down below the 50. So at this point, okay, at this point right here, you are probably not in any of these trades, right? You're not in this trade right here because there was no pullback or anything for you to get in. But look at this. If you know your support levels, your support and resistance levels, look at this. There's no forcing this thing right here. I'm gonna make this bigger for us to be able to see a little better. Oh no, that's gonna be too much. Let's make it a little bit darker. Okay, so look at this. This right here is a support level. Okay, if that's a support level, so market breaks, pulls back, you already know you're searching for a sell. Bam. Okay, did you have your entry or not? Of course you did, because you know that this right here is a support level. And it's not just a support, it's a resistance right there too. You can see, you can just keep pulling this back all the way. Okay, so this is an area, oh my goodness, an area of such beautiful interest. It's a point of interest that you would keep an eye on, right? It's an area you'd keep an eye on, and basically be searching for your trade entries over there. And look at this as well. Look at this area as well right here. You cannot even pretend that you cannot see it. There's no way, right? There's no way. Look at that. Bam, bam, bam. Two areas right there. Okay, bam, 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 right here. Guess what? Bam, market pulls all the way. So now if you miss this trade, if you miss that trade, you wait for the pullback. Okay, and you already know you are searching for sell positions. Why? You're on a downtrend. Okay, so every time the market is on a downtrend, you're searching for a sell. But because you're a smart trader, you are only going to sell if the market is meeting all your criteria. And part of your criteria right now is for the market to be below the 50 moving average. You put it there for a reason, okay? This is part of your strategy, okay? For the market to be below the 50, that's when you're gonna take the trade. All the same, you could have taken this right here below the resistance. That could have been an entry. If you missed it, you could have waited for this market to push back below, okay? Then come back below the 50. You could have taken an entry at any one point, either there or here. Okay, that's how you use the 50 moving average, and rather that's how you use moving averages. Now, another way for you to do this, and I'm gonna move fast on this, is for you to incorporate two moving averages at the same time. In this case, right, just come here to do an MA moving average, and this moving average right here, make it thicker for you. And we are going to make it a 9 moving average, okay? And now, this is going to give you extra confirmation. This is going to make it even much better. The same rules apply for the 50 moving average, for the 9 moving average. Even if you were to put a 200 moving average, the same rules apply. But now I want you to think about it this way. If you are in the same house with one other person, what are the chances that you and that one other person are going to cross paths, right? Very high, right? Very high. So when you now have two moving averages on the same chart, there is a chance that the two of them are going to crisscross one another. And that's a good thing for us. Why am I saying that? We are going to take our 50 and our 9, and then now we're going to explain this concept right here, okay? You want to follow the smaller moving average. When you have two moving averages in one chart, you always want to follow the smaller moving average, okay? What do I mean by that? Where the 9 goes, you will go. If, let's say, for example, you had a 50 moving average and a 200 moving average, you would follow the 50 moving average. But now, because you have a 50 and a 9 moving average, you are going to follow the 9 moving average. And in this case, our 9 moving average is the black one. So that's one rule, okay? The second rule over here is simply if the smaller moving average, for example, here in our case here, is going up and passes through a bigger moving average, that is a confirmation for us. Once the two of them have crossed one another and separated, for example, in our case here, that is a buy entry position. So the smaller one, as long as it's going up and it crosses the bigger one, and I always wait for them to separate. Personally, I want to see the separation. Once they separate, then I know I can buy from that position right there. Okay, this is part of the second rule. Now, if the smaller one is going down and crosses the bigger one going down, and the two of them separate, it indicates for you, oh, wait a minute, you can go ahead and sell. Okay, you can go ahead and sell. Okay, so that is probably our rule number 3. Okay, now our rule number 4, which I'm going to split into A and B. Technically, it's our rule number 3 because number 2 had A and B. So our 3, A and B, A is simply if the smaller moving average, in our case here, the 9, is above the 50, okay, and you see the 9 being rejected. It comes close to the 50, but it gets rejected above the 50 and it is pushed back up above the 50. That's another confirmation for a buy entry. If it's above the 50, goes close to the 50, and it's pushed back above the 50, it's another confirmation for a buy. The same part, rule number 3, part B, is simply if the smaller moving average, the 9 moving average, is below the 50, goes close to the 50, okay, and is rejected below the 50, another confirmation for a sell position, okay? So I'm going to keep this out in the description below. So make sure you look at that up, and also you will see the link to that Telegram chat. It's gonna be there. I'll put some of those hints over there for you to follow up on. But now you already have your strategy ready to go. And look at this. You'd have had multiple entries. So first of all, we have our sell entry right there. Done this red for a sell. We have another sell entry right there. Why? Because the 9 has been rejected below the 50. The 9 has been rejected below the 50. We have another sell entry here. Why? The 9 crossed the 50 going downwards, okay? So that would have been another sell entry in that position. And we are also in a downtrend, okay? When you're in a downtrend, you will hunt for those sell positions. I want to say like a hound dog, but I can probably say like a lion hunting for antelopes or something. Sounds much better, right? However you want to put it. But that's pretty much that right there. Then you have your buy positions right here. Why is this a buy position? Simply because the black, which is the 9 moving average, is being rejected above. Been rejected above the 50 moving average. Okay. It's been rejected above. So clone it. So which other part? I mean, this right here is not so obvious. That's not so obvious. Many people would not be able to pick that up. But you would know. You would know. You would know. Okay. So right here, the black goes above the 50. So you know that's a buy position. Okay. This is a sell position, buy position, and you can see the description right there. I am going to put those pointers somewhere on the screen so that you're able to see them, and also in the description below. And that is how to use the moving averages, right? So let me know in the comments below if you have any questions on what we just went through. And I hope that this content is going to help you definitely elevate your trading, and help you make some money along the way. Again, please, please, please like and subscribe so that we can keep growing this channel, just so that YouTube can pick up that there's some activity happening here. And I'm hoping to grow the channel to at least 1,000 subscribers. That is very possible. It's only going to happen if you guys support me through the likes and the subscription, right? So do me that favor. And also, you want to subscribe so that you can get more content coming up, more good content. I'm going to keep making more good content, more strategies along the way. In my next video, I'm going to show you how to incorporate the 200 moving average on top of the 50 and the 9 moving average. And we can actually maybe pick up some trades using the same strategy. Maybe I can do this tomorrow morning when I'm trading the New York, the London session, and hopefully see how that goes. Or even the overlap.